you like the Canadian dollar weakness, when you could argue that it's a bullish market for oil at the moment, especially with what's happening in the Middle East. Is that having a play on your Canadian dollar? Because those usually correlate quite heavily.
Yeah, they do. And I think there's obviously a risk there for them. But I kind of listen to the language from the central bank because they're the one that's going to pull the trigger. They know more than me, essentially. They've got all the data to back them up, but I don't have the data that they're privy
of course.
to. Yeah. So I kind of listen to their sort of talk, and their inflation rate is around 2.8% at the moment. So it's within the target range. I think they'd like to see it lower, and I think that's what the Bank of Canada governor will say. You know, they want to see a lower inflation rate essentially before really kind of pulling the trigger, because you know, I think the only central bank that's moved so far is the Swiss National Bank, and they kind of pulled the trigger early, hiking rates as well, and their inflation rate's well below 2%. So I think that's what the central banks may be leaning towards, if they can try and get that inflation rate down. But again, I don't think the Bank of Canada will cut rates just yet. No. They're definitely on the border of it, but that oil pressure will probably be in the back of their minds, definitely, because you do usually see that correlation. I don't know whether the correlations are strong at the moment. You know, with correlations, I always try and check up at least once a month just to see if the correlations there or not, because they can differ at some points. But I haven't checked on that myself.
I think 2024 has been a year to break correlations. If anything, we've seen across all asset markets and currencies. Yeah. And I think you can kind of just copy and paste most monetary policy statements across all the central 100%. Banks, and they're going to be the same thing. Everyone's attempting to get to the same thing. You're just doing it in different ways. We've been talking about this for months, and I know Rich is eager over here to chat about trading. So sorry, Rich, but I'm just too excited.
Sorry. No, this is education for me. You guys go for it. I love it.
It's I've always held the opinion, especially moving into 2024, where everyone was talking, you know, by late May, early June, even some as early as April, we were talks that the interest rates were going to come down. That I thought that would be an incredible risk, rather a reckless risk if they were to drop that. And we're starting to see that play out. But what we did see is people bet on that happening. You've seen the stock markets, the S&P 500 prime example, rallying. You've seen the US dollar find a little bit of weakness here and there. You've seen other currencies start pushing up as well. It's there where you had people betting that these interest rates were going to be dropped over the past 2 weeks, including the geopolitical event with Iran and Israel. You've seen gold rally. You've seen the S&P 500 fall down quite aggressively, and you're seeing a lot of US dollar strength now. Do you think this is everyone repositioning, or everyone just reacting to the geopolitical events?
That's a good question. I don't know. I think maybe it's more of just a reaction right now, because we don't really know where the Fed are positioned. Obviously, tonight we might know more, you know, because
with Jerome Powell, he's always so clear in his speeches.
Yeah, so there's always an element of risk there. I'm just looking at the big picture right now. I think that obviously the dollar is the dominant currency, and usually when there is risk around, dollar benefits from that. And I think as long as that risk remains, I don't think that risk will be pulled until there's a confirmed ceasefire, I guess. I know there has been talks of that, but is that actually occurring? You know, probably not.
Yeah, I think the element of retaliation against Iran as well, right? Like in my humble opinion, I don't think it's a matter of if, it's a matter of when. I don't think it'll be a matter where there's no retaliation. I think there will be a retaliation. It just won't be yet. So that, you know, we could have that area also get a little bit bigger, and then who's involved if it does get a little bit bigger? That's the big question as well. But it's an interesting time, and that's why I wanted to ask about your oil analysis, because obviously conflict in the Middle East is not good. Well, it is good for the price of oil. It's not good for production of oil, and that will have a play on the Canadian dollar as well. If a lot of the oil is coming out of Canada, that could be great for them.
Yeah, absolutely. And I think we saw OPEC as well. They were talking about cutting supply down, weren't they? And cutting production by, I think it was 2 million barrels a day until the end of June. So that creates demand,
They want the $100 a barrel price. they're pushing for that 100. Yeah.
I don't think the central banks will want it, but obviously, that will cause them a headache or two. But yeah, I don't see oil prices coming down just yet. We are seeing a bit of a pullback today. I was just having a look at it earlier. We are seeing a little bit of downside. I've been long oil about 10 times recently, so I think I need to pull back a little bit just to try and
marry the buyer to it.
yeah. I was getting a bit married to going long, to be honest. And the markets don't do that really, do they? They don't just move in a straight line. Well,
unless you're trading gold. I mean, Jesus.
Yeah.
20% in what? Since mid-Feb, we're up 20% in gold.
Yeah, it's ridiculous.
It's running like Bitcoin.